Good morning. It's great to see you all here. I'm going to talk very, very briefly about why I got into the games industry and why it's such an amazing opportunity, and a little bit about the do's and don'ts and the pitfalls along the way. Whilst we always think we have the most amazing ideas to pitch to the investment community, we're not always investor ready. I know a lot of games developers are very wary of investment companies, and they don't always see eye to eye. But there should be a perfect match between these two entities, and I'll try and explain why very quickly. Then I'm going to hand over to Luke, who's the managing partner and co-founder of a new VC fund called HIRO Capital, of which I am a partner too. So very briefly, I've been in the games industry before any of you were born. Back in the 70s, I started a company called Games Workshop, and then got into Final Fantasy game books, launched Tomb Raider with Eidos, was an investor in several independent studios like Playdemic with Golf Clash, one of the most successful UK-developed mobile games. More recently, I'm also chairman of Sumo Group PLC, based up in Sheffield. So this was me back in 1970s when we launched Dungeons & Dragons in the UK. We'd ordered 6 copies. On the back of that order, we got an exclusive 3-year distribution agreement for the whole of Europe. It seemed a lot easier back in those days to get started. And we opened our first shop in 1978 in Hammersmith. If any of you were in that queue, probably not. Please come forward. I'm trying to do an Apple reunion shot one day. Pretty unlikely. But today everyone knows Workshop as a PLC. It's now worth £2 billion on the London Stock Exchange, an extraordinary performance. And why is that mainly? Well, it's all about original IP, which the company owns. The whole of Workshop was built on its own IP. And I always say to development studios, if you can hang on to your IP, do so. If you can go further up the value chain in IP ownership, that's where the real value lies. Not only you get the publishing revenue from your own IP, you control your own destiny, you also get incremental revenues from licensing and merchandising. So you can see now how Workshop's branding all its stores as Warhammer shops, and of course the models have been very successful in terms of the gross margin in those models. Keep on the IP theme. When Steve Jackson and I wrote our Final Fantasy game books in the 80s, we retained ownership of that IP, and it's still ours today. So we still control our own destiny, and that has value. I moved into the video games industry in the mid-80s, wrote the launch product for Domark, which metamorphosed into Eidos, and we launched Eidos in '96. And again, the IP story, what started as a simple sketch of Lara Croft became a multi-billion-dollar franchise. Again, the licensing and the merchandising revenues, Lucasade, rebranded as Larazade, there were movies made. All these helped build the brand, yet Eidos still retained ownership of that brand. So today's pervasive nature of video games, as you can see everywhere, people are playing video games on their mobile devices and every device known to mankind. We're at a stage now, there's an incredible opportunity. There's never been a better time for content creators to monetize the whole globe through the internet. So no surprise, we have 3 billion gamers worldwide, 10 million new gamers every month, estimated to be $200 billion market by 2026. And as was just stated earlier this morning, the mobile games content of that will be worth $100 billion in a couple of years' time. So it is possible to be successful. As I said, Golf Clash, Playdemic was a company I said I invested right at the start, generated a game which was generating well over north of $100 million per annum. There's an established ecosystem in the UK, a couple of thousand game studios, of which 5 are listed entities, including in Sumo. So we're amazingly good at making games, yet only 2% of UK games companies attract VC investment. Hence the need, I would say, for the follow-on capital. It's great what UK Games Fund are doing, seed investors, EIS schemes, SEIS schemes. These are great to get games going, but if you really want to scale your business to a global audience and be successful at scale, you're going to need working capital in that business. So I'm going to hand over now to Luke, co-founder of HIRO, who's going to tell you a little bit about the need for venture capital and how HIRO is going to help you with that, fulfill that need. Thank you.
Thank you, Ian. And Ian and I are two of the three co-founders of HIRO Capital, which is a team of 10 based in London and Luxembourg. And we are a 100 million euro fund investing in the game sector across the UK and Europe. And with co-invest, that gives us potentially up to 150 million of capital to deploy in this sector. We are active and live of investing, and we've already announced 3 investments and have a few more in the pipe. So it's great to be here today and talking to you all. We invest in these 3 sectors that we think are all deeply interrelated. The game sector, and that means both game studios, not typically single games, but game studios making multiple games or planning to make multiple games, ideally doing something really different with a true innovation, perhaps a tech innovation underpinning what they're doing. We also invest in the picks and shovels, the technology, the infrastructure associated with games. We invest in esports and the wider game streaming ecosystem. We don't invest in franchises or teams, but we invest in tech and products and platforms around esports. And we also adjacently invest in the digitization of real-world sports. And we think all these sectors are converging in interesting ways, and basically games are eating the world. It used to be software is eating the world. Now everything is being gamified, and there are reasons for that we'll come on to. So broadly, it's a $200 billion sector if you put all those 3 together. Interestingly, if you take on board what Paul said 20 minutes ago about the size of game-related advertising, which we strongly believe but didn't know numbers for, it's actually more like a $350 billion sector, which makes us almost twice as big as the global television market. That's how big games is now. It wasn't always this way. If you go back to the mid-90s, beyond the left of this chart, there are 100 million gamers worldwide, mostly in the US, Western Europe, Japan, high GDP per capita countries, mostly young males. Even 10-ish years ago, there were only 200 million. Again, still mostly on consoles, a few on PC at that point, but still relatively a minority, and almost nobody on mobile when I started my company, which we ended up in the early 2000s listing on NASDAQ. We were doing mobile gaming on Nokias and WAP, and it was crap back then. WAP was crap, and then the iPhone came along. And here we are 10, 12 years later, suddenly there's 3 billion gamers worldwide, 2/3 of whom wouldn't call themselves gamers. Your mother-in-law playing Candy Crush, your 5-year-old daughter or son on Roblox or Minecraft, but they are gamers, they're in our ecosystem. It's half the human population is now playing games. So our core thesis in this fund is games are becoming the core media consumption behavior for the next wave of technology and the next generation of players, and that's what we're investing in. So let's look at some of those younger players. I mean, the stats are pretty astounding. If you survey millennials, 60% of them prefer watching esports to real sports. If you tell that to anybody over 40, they find it very, very difficult to believe, and they often ask you what the hell people are doing, but it's true. We've now got 600 million esports and game stream fans. We all know the stats on some of the kids making huge amounts of money. And obviously beyond the professional athletes making hundreds of thousands or a few million, you've got the celebrity streamers, the ninjas and so on, making tens of millions. This Generation Z's core consumption behavior is they want their media to be interactive. They want to do things to the screen and see what's happening on the screen change, whether it's a streamer reacting or a game environment changing. They want to be social in a chat room with their headphones on, talking to their friends while they play, and they expect it to be on demand and instant and so on. Very, very different from watching television. If you put that consumer change together with what's happening in tech, why are games eating the world? The thing about games is when you make a move in a game, the environment has to react. and that's largely true whether it's a simple game or a complicated game. That is computationally intensive in terms of the graphics. You need a lot to change on the screen, and it's obviously network intensive if you're doing it over a network. And basically, until very recently, computers were weak and networks were crap. And all of a sudden, we're now moving into this world with 5G and cloud and smartphones in our pocket that are more powerful than the last generation of consoles, where computers are becoming really powerful and networks are really good, and suddenly games is accelerating and getting a much wider universe. So the things we back tend to exploit in different ways, either creatively or through technology, these kind of big macro tech changes that are happening. So cross-platform games, mobile devices and device delivery neutrality. Paul was telling us figures about how big mobile games is becoming, but really what we're seeing is huge amounts of cross-platform stuff. And certainly as investors, we look for people who are making games that can, in slightly different form and gameplay factors, work across all platforms, across all devices. All of that clearly being underpinned by the cloud and 5G. When we set up our games company 20 years ago, we had to build our own data centers, databases, literally kind of wire up tin in data centers to get stuff launched, payment gateways into all the different mobile operators. None of that applies anymore. It's all out there and turnkey, so you can scale up and go global incredibly quickly. What does that mean? What can you do with that? New markets coming on stream, and we've got this huge global market, but there's no India, there's lots of India, but not much smartphone penetration there yet, so a lot of growth there. Likewise, Africa, a lot more to come. And then machine learning, wearables, and the Internet of Things. You know, what are new gameplay metaphors, new ways of human-computer interaction in a game environment, just as the Wii gave us 20 years ago, as the iPhone's given us more recently, the next generation of wearables, the next super light AR goggles, and so on. These are all themes we like and are investing in, and we see a lot of interesting stuff. The interesting thing, and to the point I made about games being intrinsically computationally difficult and therefore enhanced by new technology. These are two charts from a really great article that came out last week from a very insightful US media analyst. This is the impact of new technologies on the music industry. So this is 8-track, vinyl, cassettes, CDs, MP3 downloads, and then finally streaming. And you can see basically all that new tech is substitutional. Indeed, by the time Napster and peer-to-peer and file-sharing theft came along, actually cannibalistic. Right? It started to take off a bit recently with streaming, and will go, eventually it will grow the total market, because we'll have, instead of a few 100 million rich Westerners only listening to music, we'll have 3 or 4 billion people listening to streaming services, and that market will grow again. But broadly flat over 40 years since the 60s. In the games industry, it's a very different story. There's arcades, ticking along, doing okay. The console market from 1970 or so to now. The PC games market coming on stream 10, 15 years ago. And mobile exploding over the last decade. Every new technology has grown our market. And we see the same trend happening with cross-platform, streaming, and finally AR and VR. Games are eating the world. And here are some of the indications of that that's happened this year. Apple, obviously, I mean, a stat I saw recently, maybe consistent with some of the stuff we saw earlier, 20% of game downloads, 20% of App Store downloads of games, 80% of App Store income on Apple is games. Now launched, obviously, Arcade, Google launching Stadia, Microsoft both Azure and streaming, and the new console. The huge esports news last year, really kind of breaking into public consciousness mid-2018 with the Fortnite Ninja Drake stream, and suddenly the newspapers talking about it all the time, and again and again and again through last year, culminating in the big Fortnite mega prizes towards the end of the year. And then on the sports side and the wearables side, Google buying Fitbit and Apple launching the Watch 5 as being all about fitness and improvement. If you look at our geography, as Ian was saying, we know the UK is really good at this ecosystem, and actually so is Europe as a whole, with different patches of strength. This is some stats that we did on publicly available data. In 2018, almost half of all, about 40% of all PC and console titles developed worldwide came out of the UK or Europe, UK and Europe. Over half of all the top mobile games came out of the UK and Europe. But in terms of venture funding, not for the game sector as a whole, but in general, Europe and the UK have 1/5 the capital available that the US has, and even only a quarter of what China does. So we're incredibly good at these sectors, but there's very little money generally available. And that's a problem, and that's clearly creates a capital gap. You know many of those star titles that are developed in Sweden or the UK or Poland or the Nordics or so on and so forth. Many titles on here, both in tech and in content. But of course, if you look at most of those titles, they're not now owned by European, UK shareholders. They're typically owned by, or have as their major investors, major US or Chinese super majors. And that's because when it comes to the level that we invest at, which is Series A and Series B, post the seed level, where the UK fund is investing and the other seed funds, when you really got traction, you got a good product, a good piece of technology, a great piece of content, you got great KPIs, you suddenly need a few million to scale and go global, perhaps build out a second or a third sub-studio, really market and push your product and internationalize it. There's very few people to go to. And in general, the generalist funds are now either too big to invest in games or no longer sufficiently focused and expert. So that's where we're coming in to plug that gap. One example of a deal we announced back in November is a company that Ian introduced to the fund. And we worked on together a great company called Flavorworks, based over in Shoreditch. Has many of the characters and things we like. They've invented a new category, or a new innovation in a category, which is branching narrative games in full motion video. They had a contract and then subsequently launched their first game with Sony. And they've now got some very exciting contracts with some very big global companies to make really great series of games across multiple sub-studios for some of the biggest companies in the world. And alongside us, Sky Ventures invested in that deal and also came in and invested in the fund. Really exciting company, great team. Certainly at that Series A stage, we put £3 million in between ourselves and Sky. Liv, not a UK-based company, actually a Prague-based company, but the CTO is a Brit on the British theme, and they're a great international team. They are a streaming platform for mixed reality, so fusing the game stream of a VR headset together with real motion video of your body moving inside the game. Really cool platform, 12, 13 people based in Prague who've now powered over 3 billion views. If you've ever watched a Beat Saber video on Twitch with a person moving around with the lightsabers, it's almost certainly powered by Liv. And now I think got about 350 game developers using their tech and hundreds of thousands of streamers now. Great company. So we are live, we are investing, we love this industry. We think this industry is becoming more than it's ever been. It's becoming bigger in terms of population and player base. It's becoming more integrated and global. It's being profoundly, acceleratingly evolved by new technologies. And ultimately, it's becoming an ecosystem where the next generation of consumers coming through are going to be spending a big chunk of their time. So thanks very much.
Someone's got to pick it up.
I don't know if you've got any time for questions, Chris, but...
Wow, we have one question. Flipping heck, sorry, that was great. I've been trying to write it all down. Can I get that slide deck? Yes. No. How much? No, it's fantastic. So do we have one question for HIRO Capital? There's the lady at the front here. Mike's coming to you. Oh, there you go.
Thank you so much. Very interesting insights. A quick question to you regarding Series A, because it's quite a tricky definition. How you guys define Series A?
Okay. So we define a Series A investment for us will invest a ticket of typically 1 to 3 million euros at a valuation typically of 5 to 15 million. And at Series B, it's typically 4 to 10 million euros at a valuation of kind of 15 to 50. So at Series A, you should have a product that we can do diligence that is live or is about to go live, some early KPIs, you know, and doing something different and interesting. We looked at 350 companies in 2018. We made 3 investments. Half of those were game studios, and we made 1 studio investment. So obviously, we don't invest in a lot. A lot of what we look at is just a bit too early, so we keep it on watch. But we're looking for somebody doing something really interesting and different that we think can go global. That's the...
We'd also look in early if we had, you know, that team had previous elsewhere experience and success, and they're just doing it again. So that wouldn't count against them as being a startup.
Yeah. Yeah, an absolute...
A super team.
Super team, even doing something earlier would work.
Cool, thank you very much indeed.
Thank you.
Thanks for coming along.